So the growth capital is probably one of the biggest challenges that we see businesses face. What I would say is it depends on the kind of business that you have. I divide the world in terms of service, or the industry in terms of the service type of businesses and the businesses that actually manufacture, almost artisanal. There's an advantage to the latter in that if I make, for example, a shirt, I make shirts. The buyers of those shirts, department stores, small stores, can be a source of funding for you, either because you're able to sell the contracts that you have with them to a financier, and they call those factoring, or even from the time they order, you can get what they call purchase order financing. So purchase order financing is when a big department store orders from you, hey Paul, I'd like those shirts. You get something from, you name the big store that says, I'm going to buy 10 shirts from Paul, and therefore someone will finance 80-90% of that for you, and that's great because you can then use the money to order the inventory, get it made, have it shipped and delivered, all advanced, and then you'll net the net profit at the end of the transaction. So for people that make things, I would say leverage purchase order financing and factoring to help fund that growth. People often say, oh, that's a little expensive, but it's more expensive to not be able to even run your business. At a certain point, when you've generated enough cash, then you can look at maybe longer term forms of financing. But in the near term, that's one. Crowdfunding also, I guess fortunately or unfortunately, has really benefited those that make things. Crowdfunding often has an agreement between the business owner and those that fund the business owner that in exchange for something, they'll invest in their business. There aren't often great services that you can provide people in scale. One that has happened, that we've all read about, are films, so everyone can enjoy a movie, but that's something even that's very tangible that you manufacture. So I would say as a general matter, if you're in the service area, those options of crowdfunding, purchase order financing, factoring really don't help. And so on the service side, what you need to look at are lenders like Accion and other micro lenders, potentially banks, potentially people that can provide you lines of credit or working capital, because what you need is the ability to fund most likely people or an advancement of time to help scale what you're doing. But that's how I would think about it. Now, if you're a particular business that has a huge growth profile, you know that you're the next Google, then clearly neither of these forms are really what you want, and you want to have a real equity investor, probably, depending on the stage, anywhere from angel to venture, that is going to invest in you with the idea of taking you from where you're at to the next step right before going to become an IPO or initial public offering. Those depend on your trajectories and the kind of business that you have, but a rough way of thinking about where you're at and what you could do.